95% of traders lose money, but here's the twist. It's not because they can't read charts, it's because they're climbing the wrong mountain. Welcome to Trading Psychology Stick, where we decode the mental game behind every winning trade. Quick disclaimer, this isn't financial advice. This is about the psychology that separates those who survive from those who thrive in the markets. Picture this. You're standing at the base of a mountain, not made of rock, but of numbers, screens, and your own emotions. Every chart you open, every order you place, is another step upward. And just like climbing Everest, the market doesn't care if you're tired, scared, or desperate. The market will test you, break you, and then, only if you learn its rhythm, allow you to rise. This is the Tao of Trading, not a formula, not a hack, but a way of walking through chaos with balance. Today you'll discover that the real enemy isn't the market out there. It's the doubt, greed, and fear inside you. Jesse Livermore conquered markets and lost fortunes, not because he lacked intelligence, but because the mountain inside him was harder than any market crash. Paul Tudor Jones faced the 1987 storm that wiped out billions. While others fell into the abyss, his discipline became his rope and anchor. He didn't just survive, he thrived. This story is about you too. Whether you realize it or not, you've already begun climbing. Maybe you've slipped before, maybe you're stuck on a ledge, maybe you're staring up, wondering if it's worth it. Here's the paradox. The higher you climb, the less it's about chasing profits, and the more it's about mastering yourself. The strategies are your tools, but the endurance, patience, courage, those are within you. So take a breath, look ahead, because in the next section, we confront the first truth. The market is a mirror, and it will show you exactly who you are. Section 1, the mountain mirror. The first step on this path is startling. The market is nothing more than a mirror, not of prices or news, but of you. When you place a trade, it reflects your impatience or patience, your greed or discipline, your ability to endure uncertainty, or your desperation for control. Most people think they're fighting the market. Truth is, they're wrestling with their own shadows projected onto the screen. Jesse Livermore wasn't destroyed by the market, but by himself. He made millions reading patterns others ignored. He also lost everything more than once, because he couldn't tame the storm inside. His tragedy whispers a warning. No strategy can save you if you don't first recognize that your inner world broadcasts back through every candlestick. Picture a chart after a sudden drop. Do you see opportunity or doom? The chart doesn't change. Your perception does. One trader's fear is another's entry. The market itself is neutral, a blank canvas. Your thoughts, stories, scars paint it with danger or promise. Alexander Elder, psychiatrist turned trader, captured this elegantly. Markets are the world's largest psychological testing ground. Every price tick whispers, will you stay calm or will you panic? Elder believed trading success was 80% psychology, only 20% method. When you look at a chart, what part of yourself stares back? The reckless gambler, the anxious perfectionist, the patient strategist, or the wise climber who knows storms pass? Quick check. Think about your last losing trade. What emotion dominated? Fear, anger, denial? Type that emotion below right now. Just one word. This awareness becomes your first rope. But even with self-awareness, most traders stumble into hidden traps laid by their own biases. The mountain exposes your blind spots in the most painful ways. Let's uncover those secret saboteurs next. Section 2. The saboteurs hiding in the shadows. Every mountain has hidden crevasses where ground looks solid until it suddenly gives way. In trading, those cracks are your psychological biases. Confirmation bias, loss aversion, anchoring, overconfidence. They don't come with warning signs. They come disguised as common sense. Take confirmation bias. You buy a stock, believing it's destined to rise. Instantly, your brain hunts for evidence proving you're right, while ignoring whispers you're wrong. You scroll Twitter, cherry-pick headlines, highlight bullish technicals. Every red flag gets filtered out. Feels like clarity. It's actually fog thick enough to swallow your account whole. Loss aversion cuts deeper. Studies reveal the pain of losing is psychologically twice as powerful as the joy of winning. Imagine climbing this mountain. You've made it 100 meters higher, but the thought of slipping back even 10 meters terrifies you. This fear makes you grip too tightly, exhaust yourself, freeze when you should move. Richard Thaler, Nobel Prize-winning economist, demonstrated this repeatedly. But you don't need a Nobel to feel it. You've felt it every time you've stared at a red trade whispering, "It'll come back," even as it sinks deeper. That whisper is the saboteur pulling your rope. Consider anchoring. A stock once traded at $100, now it's $60. You anchor to the old price, convinced it must return to its true value. But the mountain doesn't care where you began. It only cares about the next step. Then there's overconfidence, the cruelest saboteur. Strikes hardest after winning streaks, filling you with invincibility illusions. Ed Seykota said, "Win or lose, everybody gets what they want out of the market. For the overconfident, what they secretly want is to feel invincible. The mountain grants them the opposite." The turtle traders proved even simple systems create millionaires, but only if the trader obeys the system instead of bias whispers. One turtle said, "Our biggest enemy wasn't the market, it was ourselves." Here's an uncomfortable truth check. Which bias has cost you the most money? Really think. Confirmation, loss aversion, overconfidence? Comment your answer below. Recognizing it is the first step to defeating it. Your most dangerous opponents aren't hedge funds or algorithms. They're the saboteurs inside you, waiting for moments you're tired, greedy, afraid. But once you see these shadows, how do you climb in rhythm with a mountain that never stops shifting? How do you move from chaos into flow? Section 3. From chaos to flow. Halfway up the mountain, air thinner, wind unpredictable, every step could end in disaster. At first, climbing was chaos. Rocks loose, storms without warning, heart racing out of sync. This is exactly how most traders experience markets early on. Overwhelming noise, random moves, a battlefield where every headline feels like an avalanche. But there's a deeper state, a hidden rhythm beneath surface chaos. When you find it, chaos transforms into flow. Michael Burry understood this before 2008. While everyone else saw unstoppable housing prices, Burry heard different rhythms. He listened to cracks forming in the ice. While crowds danced to euphoria's beat, he moved in a flow state, allowing decisive action where others froze. It was electric, but it carried him through the storm into trading history. Flow in trading isn't mystical trance. Psychologists describe it as challenge meeting skill in perfect balance. You're fully absorbed, time warps, distractions vanish, actions connect seamlessly. In markets, this means you're not paralyzed by conflicting signals. You're tuned to the few that truly matter. Flow emerges from preparation plus presence. The mountaineer studies maps, tests gear, trains the body before stepping onto slopes. The trader journals past trades, builds rules, rehearses scenarios, then steps into the market ready. Only then does flow reveal itself, like rope appearing in fog. You stop chasing the market, you move with it. Let me share something personal. Early in my journey, I'd stare at charts for hours, paralyzed. Too many indicators, too much noise. Then I stripped everything away, just price, volume, and my breathing. Suddenly patterns emerged, not because the market changed, but because I stopped fighting its rhythm. Flow is alignment between inner state and outer action, between accepting risk and executing plans. When you're in flow, losses don't derail you because you've rehearsed them. Wins don't intoxicate because they're part of the rhythm. But flow is fragile. The moment ego demands certainty, rhythm shatters. The moment fear grips, harmony breaks. Cultivating flow means letting go. Letting go of needing to be right, controlling every tick, fantasizing the mountain should bend to your will. Next time you face a storm of red candles, pause, breathe. Ask yourself, what's the rhythm here? What's the balance between my skills and this challenge? Even with flow, the mountain demands more. Strategy isn't just moving smoothly. It's knowing where to place your rope, how to balance risk and reward, how to climb with purpose. Time to explore the 3 pillars separating survivors from those who fall. Section 4. The 3 pillars of strategy. The climb steepens, clouds thicken, ground narrows. Every step feels like a bet between survival and collapse. Without framework, the mountain is merciless. What keeps you on path are 3 invisible pillars: risk, reward, and probability. Your map, compass, and rope. Without all 3, you're blind. Paul Tudor Jones knew this in 1987. Just before Black Monday, markets roared with reckless confidence. Jones studied terrain with cold precision. He saw imbalance between risk and reward, understood collapse probability was higher than crowds admitted. While billions vanished in one day, Jones walked away not only unharmed, but immensely profitable. Risk is the distance to the drop below. Maximum pain you'll endure if your hand slips. Too many traders ignore it until they're already falling. Wise climbers set anchors before ascending. In trading, this anchor is your stop loss, the level where you cut the rope to save your life. If distance to summit is too small, why risk the crossing? In trading, this is your target, profit objective. But here's the art. Not every summit is worth chasing. Many are false peaks draining your strength. Probability is the weather forecast. You may want the summit, accept the risk, but if storms are likely, wisdom says, wait. Probability means stacking odds in your favor, understanding patterns, history, setups, tilting chance towards survival. When these three align, when risk is small, reward large, probability favors you, you create what traders call asymmetric opportunity. The downside, limited, upside, meaningful, odds tilted your way. This builds your rope bridge across chaos. Here's the trap. Most traders treat pillars separately. Focus on reward, forget risk. Obsess over probability, ignore position size. The Tao demands balance. Like tripod legs, if one's missing, structure collapses. Test every trade with this framework. What's my risk? What's my reward? What's the probability? If any answer feels uncertain, pause. Better to rest than plunge. Paul Tudor Jones didn't survive by being smarter. He survived because his three pillars were stronger than the avalanche. Yours must be too. But knowing pillars isn't enough. You must know how to place your weight, how to size each move so no single misstep sends you tumbling. That's the art of positioning, our next crucial secret. High on the mountain, the path narrows to a knife's edge. Sheer drop on one side, jagged cliffs on the other. Survival depends not on brute force, but on balance. Every step measured, every weight shift deliberate. In trading, this is position sizing, the silent factor deciding whether you endure or vanish. Mark Minervini embodies this truth. Known for turning small sums into fortunes, his real edge wasn't magic signals. It was sizing. He treated every trade as a fragile ledge crossing, never placing more weight than rock could bear. By risking small percentages per trade, even if the ledge crumbled, he'd live to climb again. That discipline transformed him from struggling trader to U.S. investing championship winner. Most traders fail, not because ideas are terrible, but because sizing is reckless. They load half their capital into one trade, intoxicated by conviction, only to watch a single slip shatter months of progress. Imagine a climber putting entire body weight on loose stone. If it holds, he leaps forward. If it cracks, he's dead. Wise climbers never gamble like this. They distribute weight, test the rock, move in increments. Position sizing translates your three pillars into survival. If risk is the drop, reward the summit. Probability the weather, then sizing is how tightly you grip the rope. Too tight, you burn out. Too loose, you fall. The Tao insists on moderation. Never risk more than 1 or 2% of capital per trade. That way, even a series of losses becomes bruises, not broken bones. Here's something most don't realize. Proper sizing doesn't just protect, it empowers. Gives you courage to take trades others fear, because you know no single step can destroy you. This courage creates consistency. Consistency is the slow rhythm of ascent. Consider how casinos operate. They don't win every hand, but by managing bet sizes relative to odds, the house always survives long enough for probabilities to play out. You must become your own casino. Quick reality check. Look at your last 5 trades. What percentage of your account did you risk on the biggest one? If it's over 5%, you're not trading. You're gambling. Time to adjust your grip before the mountain claims you. Next time conviction whispers go all in, pause, ask yourself, am I placing my entire body on one loose stone? Or stepping with balance, giving myself the chance to keep climbing even if this stone cracks? Yet even sizing needs a system to guide it. The mountain is vast. Intuition alone isn't enough. Do you climb with random steps or trust a tested path? Let's discover the power of systemizing your edge. Section 6, the strategic edge. There's a point on every mountain where terrain looks identical. Stone upon stone, fog upon fog. Climbers relying only on instinct wander in circles, burning energy, risking disaster. Climbers with maps follow tested routes carved by those before. In trading, this is the difference between gut feel and system. Edge isn't born from random intuition, but from repeatable process you trust when fear or greed threaten to blind you. Richard Dennis proved this with his turtle trader experiment. In the early 80s, Dennis bet trading success could be taught. He recruited ordinary people, teachers, accountants, even a security guard, and gave them simple mechanical rules. These weren't Wall Street prodigies. They were climbers handed rope and told how to tie knots. Many made millions. Their success proved intuition is fragile, but system is durable. A strategic edge is simply this: a tested, disciplined approach applied again and again. It removes the chaos of should I or shouldn't I, and replaces it with clarity. If X happens, I do Y. This clarity is your compass in fog. Without it, every market twitch feels personal. With it, every twitch becomes data. But here's the paradox many miss. Purely mechanical systems eventually fail if treated as magic. Markets evolve, patterns decay, the mountain shifts. The Tao reminds us edge isn't rigid rule carved in stone. It's living process. Best traders blend system with awareness, rules with adaptation. They treat systems as rope keeping them safe, but also watch weather, feel the rock, adjust rhythm. Jim Simons and Renaissance Technologies built algorithms scouring markets for patterns. They trusted systems so much, human emotion nearly vanished from process. Yet their real edge wasn't formulas alone, but constant adaptation. Refining, evolving, never letting the mountain's shifting face catch them unprepared. For you, the takeaway is simple. Build edge on repeatability, not luck. Backtest strategies, track trades, refine process. Make decisions boringly consistent, because boredom in execution creates excitement in results. Let me ask you something. Do you have written rules for entry and exit, or are you making it up as you go? If you don't have rules written down, you don't have a system. You have hope, and hope isn't a strategy on this mountain. Even with system and edge, you still face the unpredictable force of market's breath. Prices move like wind gusts, invisible currents lifting you higher or hurling you into the abyss. To survive, you must learn to feel the wind. Read price action not as chaos, but as the mountain's pulse. That's our next revelation. Section 7, Price as Energy. The higher you climb, the more you notice the wind. Invisible, unpredictable, sometimes gentle push upward, other times violent gusts threatening to tear you from cliff. Price in markets is exactly like that wind. You can't see the force itself, only its effects. The candle that surges, chart that wavers, volatility rattling your grip. To survive, stop treating price as random noise. Start feeling it as energy. Kathy Leon built her Forex career not chasing hundreds of indicators, but learning how currencies breathe. She studied how price reacted to news, how momentum carried across sessions, how order flow left footprints. For her, price wasn't static data. It was living, breathing current. She moved with it, never against it. That sensitivity became her competitive edge. Price action is the purest truth markets offer. Fundamentals can lie, news can mislead, but price never hides what participants are doing right now. Think of a candle breaking above resistance. It's not just lines on charts. It's collective exhale of fear turning into hope. Sudden rejection at support isn't simply a bounce. It's pulse of doubt, refusal to fall further. When you see price as emotional energy of millions condensed into single ticks, you stop fighting and start listening. But listening isn't predicting. Just as climbers can't command wind direction, you can't dictate price. The Tao of Trading is about alignment, not control. Lean into gusts, shield during storms, let tailwinds carry you when they appear. This means identifying patterns not as guarantees but as probabilities of energy repeating itself. William O'Neill mastered this awareness. He didn't just scan fundamentals. He studied rhythm of price surges and pauses, how strong stocks built bases before exploding higher. He saw patterns not as rigid laws, but signals of energy building, waiting for release. When he acted with conviction, because he'd learned to feel wind before storms. Try this experiment tomorrow. Watch price move without any indicators, just candlesticks. Their size, speed, rejection, wicks, quiet pauses. These aren't random lines, but market's heartbeat. The more you observe, the more fluent you become in its language. Yet awareness alone isn't enough. You may feel the wind, but the critical question remains. When do you step forward? When do you wait? Entry and exit are the difference between riding gusts to higher ledges or being flung into the abyss. Timing, patience, rhythm. That's the next secret the Tao reveals. Section 8. Timing the dance. The mountain is alive with rhythm. Clouds drift, avalanches rumble, wind stills, then roars again. Climb recklessly, you're crushed. Climb too timidly, you freeze in place. Trading is identical. You can read price wind, but if you don't know when to move, when to step forward, when to hold back, you're dancing out of sync with the mountain, and the mountain always wins. William O'Neill understood this dance with uncanny precision. Through Conslim, he studied how great stocks moved before biggest advances. After strong runs, they rested, forming bases, consolidations, moments of quiet where energy gathered. Most traders grew impatient in these pauses, leaping too early or abandoning the climb. But O'Neill knew waiting for confirmation, volume surging, price-breaking resistance, was like stepping onto ledges only when wind shifted favorably. His timing transformed ordinary opportunities into legendary runs. Patience is timing's hidden virtue. Imagine staring at a snow cornice. Looks solid, but it's fragile, ready to collapse. Rushing across because the view is great is suicide. Disciplined climbers wait for right conditions, for snow to harden, rope to secure. Similarly, traders jumping into setups without confirmation often find themselves tumbling. Charts may look tempting, but without the signal, without the gust in your direction, you're gambling, not trading. But timing isn't hesitation. There's a razor-thin line between patience and paralysis. Markets punish both recklessness and endless second-guessing. The Tao calls for rhythm, calm readiness to act instantly when setups align. This is why preparation is essential. Decide conditions in advance, write them down, rehearse them. So when signals flash, there's no debate. You move with grace, not panic. Michael Burry's housing market short wasn't just about insight. It was about timing. He knew storms were coming, but also knew waiting too long would drain capital. So he positioned early, suffered ridicule and temporary losses, but stayed aligned with the rhythm he believed in. His timing wasn't perfect. No one's is. But conviction allowed him to endure until avalanches finally broke. Here's a painful truth. How many times have you entered trades out of boredom, out of fear of missing out? Each time you do, you're dancing to the market's rhythm. You're forcing your own beat, and forced beats always end in stumbles. Timing is the art of trust. Trust in your system, your preparation, trust that not every ledge must be crossed today. When you internalize this, FOMO loses grip. You realize another gust will come, another window will open. The mountain is infinite, opportunities never vanish completely. Ask yourself honestly, do you move too soon or hesitate too long? Both are symptoms of minds not yet in rhythm. Practice waiting, practice readiness. Learn to step into the dance only when the mountain sings your song. Yet even elegant timing can't protect from unexpected slips. Storms will hit, your hand will miss, sometimes you'll fall. The difference between survival and ruin lies in how you prepare for those inevitable moments. Time to explore the alchemy of risk, the art of turning losses into fuel for your ascent. No matter how carefully you climb, sooner or later your foot slips, a handhold crumbles, wind knocks you sideways. The question isn't whether you'll fall, it's whether you'll survive the fall and keep climbing. This is risk alchemy, transforming inevitability of losses into fuel powering your ascent. Stanley Druckenmiller built his reputation not just on colossal wins, but on ruthless defense. He often said the key to success wasn't being right more often, but losing the least when wrong. When conditions turned, he didn't wait for disaster. He cut the rope and regrouped. This mindset kept him in the game for decades, long after countless bold traders were buried by leverage avalanches. A stop loss isn't failure. It's calculated sacrifice, the price of staying alive. Picture a climber slipping down an icy wall, caught by rope anchored into rock. That rope is the stop loss. Painful, yes, but it prevents catastrophe. The unanchored climber is at gravity's mercy. In trading, failing to define risk before entry is stepping into storms without rope. You might be fine for a while, but the mountain always claims the careless. Risk alchemy isn't just limiting pain, it's recycling it into strength. Every loss is a signal, information about your system, psychology, timing. Alchemy is transmuting failure into knowledge, scars into wisdom, setbacks into resilience. Disciplined traders journal losses, study them, adapt. Undisciplined traders bury them, deny them, repeat the same fall. Nassim Taleb's anti-fragility concept applies perfectly. Systems that don't just resist shocks, but grow stronger from them. A climber who falls and learns which grips to trust becomes sharper, more attuned. A trader treating losses as tuition builds a skill fortress no single market crash can topple. Yet many traders resist this truth. They cling to losers, whispering it'll bounce back. They move stops further away, hoping the mountain shows mercy. But mercy isn't in the mountain's nature. The only mercy is the one you create by defining risk and respecting it. Time for a gut check. In your last losing trade, did you honor your stop or did you move it? Did you take the small cut or let it become a wound? Your answer reveals whether you're practicing risk alchemy or risk denial. How do you practice risk alchemy? Set stops before entry, never after. Size positions so losses are survivable, bruises not broken bones. Record outcomes not as scarlet letters, but as data points. Remind yourself daily, markets don't reward ego survival, they reward capital survival. Druckenmiller's genius wasn't avoiding falls. It was always living to climb another day. That's the essence of risk alchemy, not escaping loss, but harnessing it as rope keeping you moving upward. Once you accept this, a new challenge emerges. Risk management and survival aren't enough. To endure the long climb, you need habits, rituals, discipline, anchoring your mind when storms rage. Time to explore the zen of discipline, the next layer of the Tao. The higher you climb, the more the mountain tests resolve. Air grows thinner, storms arrive without warning. Every muscle screams to turn back. At this stage, it's not strength that carries you, but discipline. The quiet, relentless force keeping one foot moving after another. In trading, discipline isn't glamorous. It's not the thrill of massive wins or drama of crashes. It's the boring, repetitive act of following your plan day after day, long after excitement fades. Yet this boring act separates those reaching summits from those vanishing in fog. Ed Seykota pioneered computerized trading and once said, "The elements of good trading are cutting losses, and cutting losses." Behind that dry humor lies profound truth. Seykota thrived not because of secret indicators, but because his discipline was absolute. He created systems and obeyed them with monk-like devotion. While others panicked or chased fads, Seykota's calm consistency turned small accounts into fortunes. His story reminds us discipline isn't punishment, it's freedom from chaos. But how do you cultivate discipline? Through ritual. Just as monks use prayer beads, climbers rehearse movements before dangerous ascents, traders use daily routines anchoring minds, journaling trades, reviewing setups, rehearsing entry and exit rules. These aren't chores, but scaffolding, holding your mind steady. Each ritual is rope fixed into rock, ensuring when fear or greed pull you off balance, you remain anchored. Discipline is also about restraint. Imagine climbers staring at unstable ledges, tempted to cross just to feel progress. Disciplined climbers wait, check rope, measure steps. Similarly, traders see countless opportunities flashing across screens, but know not every move deserves action. Discipline is saying no 9 times so you can say yes once with full commitment. Here's the paradox. Discipline isn't rigidity. Climbers refusing to adapt to changing weather are doomed. Disciplined traders aren't stubborn, but responsive. They follow rules, but also refine those rules through reflection and testing. True discipline is the marriage of obedience and growth. The Tao teaches discipline isn't about crushing emotions, but channeling them. Fear that once made you panic becomes a signal. Greed that once drove recklessness becomes ambition harnessed by boundaries. Like Zen practice, discipline transforms storms inside you into stillness. So, when markets rage, you remain calm. Let me challenge you. Tomorrow morning, before you open any chart, write down your plan. What are you looking for? What will make you enter? What will make you exit? If you can't answer these before the market opens, you're not trading with discipline. You're improvising on a cliff. Ask yourself, do your trading rituals anchor you, or do you rely on raw willpower alone? Willpower fades quickly, but rituals endure. Begin each session with review, end each with reflection. Trust the rope of routine to hold you steady. Yet, even with discipline, you can't escape that emotions are always present. The mountain still whispers through fear, euphoria, doubt. The next challenge isn't silencing these voices, but hearing them clearly. Treating emotions not as enemies, but as signals. That's where the path now leads. On the mountain, you feel storms long before they break. Sky darkens, wind shifts, silence grows heavy. These aren't distractions, they're signals, warnings, preparing wise climbers. In trading, emotions are identical: fear, greed, euphoria, doubt. Most treat them as enemies to suppress, but the Tao whispers subtler truth. Emotions aren't to be silenced, they're to be read. They're early tremors before avalanches, distant rumbles hinting at change. George Soros famously had a curious habit. When his back ached, he re-examined positions. To others it sounded absurd, mystical even. But Soros understood. His body often sensed what conscious mind ignored: stress, unease, that gut gnawing. These were signals from his subconscious integrating information too complex for logic alone. He didn't always act on them, but he always listened. That practice saved him more than once. Fear is the most obvious signal. It swells when risk grows too large, when positions are too big, when markets threaten to strip you bare. Fear tells you something's out of balance. Ignore it. Fear becomes panic. Respect it. Fear becomes rope pulling you back from edges. Greed signals differently. It surges when you've tasted success, feel invincible, when summits look close. That surge warns danger ahead. This is when traders overleverage, abandon stops, mistake momentum for immortality. Many fortunes lost in euphoria's glow. Euphoria is perhaps most dangerous. It blinds climbers to falling rocks, drowns out risk whispers. Doubt, however, is often a gift. Forces you to review reasoning, seek evidence, temper conviction. Doubt, when balanced, becomes wisdom. Alexander Elder wrote, "Markets are Earth's largest psychological testing ground. Every tick measures your ability to manage emotion." But instead of fighting these feelings, treat them as barometers. If fear is screaming, perhaps size is too large. If greed is rising, maybe stops are too loose. If euphoria blinds you, step back and journal before the fall. The Tao invites you to embrace emotions as part of the climb. They're not flaws but instruments, like heartbeat telling you when to rest or push harder. Traders trying to be emotionless become brittle. Those reading emotions become flexible, adaptive, alive. Here's today's practice. Next time your chest tightens or pulse quickens while trading, don't bury it. Pause. Ask what this signal is pointing to. Write it down. Is it warning you about position size, market conditions, your mental state? This awareness could save your account. So, what does this mean for you? It means next time fear grips or greed whispers, treat them as mountain guides, not enemies. Adjust your rope, rebalance position, breathe into the storm. But emotions, powerful as they are, aren't enough to sustain you through the long climb. Beyond signals, you need capacity to fall and rise again, to turn every storm into strength. That's resilience. That's anti-fragility. And that's where we now ascend. Every climber falls. The question is never if, but when. True mastery isn't measured by how high you climb in the calm weather, but how you rise after avalanches. In trading, this is resilience, the art of absorbing blows without breaking, transforming collapse into renewal. It's not survival of strongest, but most adaptable. Nassim Taleb calls this anti-fragility, systems growing stronger through stress. Just as bones thicken under strain, muscles strengthen after tearing, anti-fragile traders use losses to become sharper, more agile. Instead of fearing volatility, they welcome it, because every shock teaches them to thrive where certainty doesn't exist. Ray Dalio, in 1982, was so confident in macro predictions, he bet everything on collapse. When markets surged instead, he was ruined, borrowing money from his father just to stay afloat. Most would have disappeared. Dalio rebuilt. Out of humiliation came Bridgewater's principle-driven system, designed preventing overconfidence and stress testing every idea. His resilience forged not just comeback, but the world's largest hedge fund. Resilience in trading isn't about ignoring pain. It's facing it without denial. Climbers who slip learn which rocks can't be trusted. Traders who blow up learn leverage's hard truth. The unwise either quit in despair or repeat mistakes until mountains swallow them whole. The resilient pause, reflect, adjust systems so the same fall never happens twice. But resilience requires humility. Mountains humble all climbers, no matter how skilled. Resilient traders accept this truth. They don't demand perfection from themselves or certainty from markets. They build buffers, diversification, position sizing, cash reserves. So, storms can't wipe them out. they pace for decades, not days. To cultivate resilience, journal every fall, but don't just record numbers. Capture emotions, thought patterns, blind spots, then design rituals to counter them. If greed tripped you, shrink size. If fear froze you, rehearse systems until execution becomes automatic. Over time, each scar becomes new armor layer. The Tao whispers. Fragility resists and shatters. Resilience absorbs and endures. Anti-fragility transforms and rises higher. You're not climbing to avoid falls. You're climbing to become the kind of trader who grows from them. Personal confession. My worst loss came from overconfidence after a winning streak. I ignored my rules, doubled position size, and watched a month of gains evaporate in minutes. But that pain taught me what no book could: respect for the mountain. Now, after every win, I reduce size. That fall became my teacher. Once you discover resilience, the climb changes. You stop fearing setbacks because you know you'll return stronger. That freedom opens the door to compounding, not just of capital, but wisdom. The small steps once feeling meaningless now become the secret to reaching heights others never imagine. Time to explore the quiet power of scaling and compounding. Section 13. Scaling the strategy. On the mountain, progress often feels invisible. 100 careful steps, summit still hidden behind clouds. But compounding is gravity working in your favor. Imperceptible at first, unstoppable over time. The climber taking small, deliberate steps daily eventually looks back and realizes they've scaled an impossible wall. In trading, scaling and compounding transform modest wins into extraordinary wealth, provided you respect the Tao of patience. Ray Dalio called this the eighth wonder of the world. After his early collapse, he rebuilt Bridgewater one principle at a time, compounding not just capital, but knowledge. Every mistake logged, every insight tested, every ritual refined became part of expanding system. By focusing on steady growth rather than heroic leaps, he created resilience and wealth spanning decades. Compounding thrives on discipline. Risking too much searching for quick fortune shatters the process. Just as sprinting recklessly up steep rock burns lungs before summit, patient climbers take measured steps, secure each rope, no progress builds invisibly until suddenly they stand far above where they began. In trading, this means risking small percentages, reinvesting gains, letting time do heavy lifting. Scaling is the art of pressing advantage when conditions align. Imagine climbing with clear skies, firm rock, strong footing. This is when you push harder. Paul Tudor Jones understood this well. He kept losses small, but when conviction and probability aligned, he increased size. The Tao teaches you the same. Defend fiercely when uncertain, expand boldly when mountain tilts in your favor. But scaling requires restraint. Many traders, intoxicated by early success, expand too fast. They climb as if weather never changes. Then one storm wipes out months of gains. The Tao whispers, press your edge only when wind's at your back. Always keep reserves for storms. Warren Buffett, though investor not trader, embodies compounding, starting small, reinvesting relentlessly, refusing to interrupt process with reckless bets. He allowed time to be greatest ally. His mountain was decades long. His summit emerged not from leaps, but steady steps. For you, the lesson is clear. Focus less on thrill of one giant trade, more on rhythm of consistent modest wins. Compound them with discipline. Scale them when edge is undeniable. In time, invisible force of compounding carries you higher than sheer effort ever could. But as you rise, you'll notice something else. You're not climbing alone. Around you are shadows. Other climbers, some hidden, some towering, some waiting to knock you from ledges. To survive higher peaks, you must recognize the invisible competition surrounding you. That's the next truth awaiting us. At lower slopes, the mountain feels empty. You climb in solitude, testing strength against rock and weather. But ascending higher, shadows appear. Other climbers you didn't know existed. Some move silently, faster than you imagine. Others set traps, dislodging rocks without warning. These are your competitors in markets, institutions, algorithms, funds with resources far beyond yours. They're the invisible presence shaping the very terrain you climb. Jim Simons and Renaissance technologies embody this unseen power. While most traders wrestled with charts and news, Simons built mathematical models dissecting markets into patterns no human eye could spot. His algorithms moved with speed and precision, harvesting opportunities in microseconds, long before others noticed the wind gust. Renaissance wasn't climbing the same mountain, it was reshaping the path itself. To retail traders unaware, it feels like ground shifting beneath feet, but truth is invisible competition altering landscape. This doesn't mean the mountain is unwinnable, it means you must climb differently. You can't outpace algorithms in speed, but you can outlast them with patience. You can't outspend hedge funds in data, but you can outthink them in niches they overlook. The Tao isn't about fighting giants head-on. It's about moving with awareness, finding ledges where their bulk can't follow. Sun Tzu wrote, "The greatest victory is that which requires no battle." On the mountain, this means choosing paths wisely. In trading, it means focusing on setups with asymmetric reward, where small size is advantage, not weakness. While massive funds move billions slowly, you slip in and out of positions like climbers, moving lightly across fragile ledges. What weighs them down becomes your freedom. But invisible competition isn't just external, it's also internal. Your ego, impatience, craving to prove you're smarter than markets. These inner competitors are often more dangerous than any hedge fund, because they sabotage from within. Recognizing them is part of mastering the climb. How do you survive this arena? Remember, the mountain is vast. No need to fight every battle. Focus where your edge is sharpest, where size lets you move invisibly, where discipline shields from traps. Respect the shadows, but don't fear them. When you do this, something shifts. You stop climbing in competition and start climbing in harmony. The invisible others become part of landscape. Predictable, navigable, no longer terrifying. The Tao teaches your greatest freedom isn't beating everyone to peaks, but choosing your own summit. This brings us to final ascent. Beyond risk, beyond competition, beyond even wealth itself, lies the true purpose of the climb. What happens when you finally reach the summit? What is the legacy of the Taoist trader? That's the final revelation waiting just ahead. Section 15, The Taoist Trader's Legacy. At last, clouds part. The summit stands before you, radiant in morning sun. Every bruise, every slip, every storm endured led here. Yet as you stand on the peak, you realize something profound. The mountain was never about conquering rock or snow. It was about conquering yourself. Trading too isn't about piling wealth for its own sake. It's about freedom, wisdom, purpose you uncover along the climb. Elon Musk nearly lost everything when Tesla teetered on bankruptcy's edge. Jeff Bezos was ridiculed for reinvesting profits into growth when Wall Street demanded quick returns. Both faced storms that would have shattered lesser climbers. But their purpose was larger than survival. They climbed not just for money, but to change the world. Musk with sustainable energy, Bezos with global commerce. Their fortunes became byproducts of vision, not vision itself. The Taoist trader learns the same lesson. Wealth isn't the summit. It's the view allowing you to choose paths freely. True success isn't measured in dollars, but in life you build with them. The mornings you don't dread, choices made without fear, freedom to walk away when something no longer aligns with purpose. Money becomes rope, gear, oxygen, not the mountain itself. Legacy isn't about leaving behind fortune, but leaving behind wisdom. Stories of Livermore, Druckenmiller, Minervini, Seikota, Soros, Simons endure not because of numbers and accounts, but lessons carved into mountains for us to follow. Your legacy too is written in how you climb, with patience, resilience, discipline, harmony. The Tao whispers. The summit isn't the end, it's only a place to see more clearly. From here you realize mountains stretch on, peak after peak, each one new challenge, new lesson. There's no final conquest, only endless practice of walking paths with awareness. So, what will your legacy be? Will you chase wealth until it crushes you? Or climb with intention, leaving markers for those coming after, showing them how to ascend with grace? The Taoist trader chooses the latter. And now, as we close this journey, remember, the real summit is within you. The market is only its mirror. The tools you've gained, risk management, position sizing, flow, resilience, are ropes for every climb in life, not just trading. Use them, and paths ahead will open. But the mountain still calls. Another storm brews. Another opportunity waits. The Tao of trading doesn't end here. It begins again each time you take the next step with wisdom. You've walked with me across this mountain, through storms of fear, across ledges of risk, past avalanches of emotion. all the way to summits where clouds break and views open. Now, I want to ask you something important. What will you do with the rope in your hands? Because this journey isn't just stories about traders long gone. It's about you. Every candle you watch, every trade you place, every choice you make facing uncertainty. Those are your steps on this mountain. The Tao of Trading isn't theory, it's practice. It's risk management when pulse races, position sizing when greed tempts, journaling when doubt clouds vision, patience when markets bait with noise. It's courage to slip, learn, rise stronger each time. That's how Jesse Livermore's tragedy becomes your warning, Druckenmiller's defense your shield, Minervini's precision your rhythm, Soros's intuition your signal, Taleb's anti-fragility your strength, Simon's system your edge. Here's what I invite you to do right now. Take one idea from this entire journey, just one, apply it in your very next trade. Maybe it's defining risk before clicking buy. Maybe cutting size in half so fear loses grip. Maybe writing down why you took the trade so when you look back, you'll see yourself in market's mirror. Don't try mastering the whole mountain in a day. Take one step, then another. That's how you climb. Now, before you go, I have a question that might change everything. What if the biggest risk you face isn't in the market at all? What if it's the risk of never truly understanding yourself as a trader? Think about that. Then type below the one trading habit you're committing to change starting tomorrow. Not next week, tomorrow. Make it specific. Make it real. I read every single comment, and your commitment might inspire another climber who's struggling. If this path spoke to you, don't let it end here. Subscribe to Trading Psychology Stick, because the next climb is already waiting. Each video is another rope, another map, another gust of wind carrying you forward. Share this with someone still struggling at the base of their own mountain. No climber should walk alone. The summit isn't the end, it's a beginning. You are the mountain, the market is your mirror, and the Tao of Trading is the rhythm carrying you higher, one step at a time. Welcome to the journey. Your real climb starts now.